Hi everyone, welcome back to Be Rich. Happy Saturday evening. I hope you're enjoying your weekend. And those of you who are working today, at least you have Sunday to look forward to recuperate from a 6-day work week. A lot of us have to get back to office and not work from home anymore. That trend seems to be picking up more and more steam throughout the country and the world. So those of you working on Saturday, especially having traveled distance to get to your office, I can understand and relate to what you're going through. So what did I want to talk about today? I want to talk about today this idea which a lot of you are suffering from, and I wanted to explain to you why thinking like that mindset is a waste of time. And that is why average cost buying is a terrible mindset to have, especially if you're a value investor. So why do I think this is a terrible mindset to have? Well, the problem when anchoring your decisions is to your prices, it's anchoring to the past. It is something that's over and done with. It is on past earnings, it is on past market, it's on past data. You entered it at that point of time. So you're looking back, and that has no relevance to future value. It has no bearing to the future, what future earnings might be, what will happen in the market in the future. So anchoring on the past is never helpful. And the second most important thing is, stock market doesn't care about what your average is. Stock market doesn't care about anybody's averages. Stock market doesn't work on averages. It is morely random, and it's very hard to predict, and it's full of uncertainty, and trying to glean any data like this, especially on cost and averages, is a waste of time. And the last reason why this is a bad idea is obsessing over price and cost average. It leads to bad capital allocation. What do I mean by that? Let me explain that. Let's say you bought a company like X, Y, Z. I don't want to mention right now any company names. And you bought it at a value when the PE was right and the market was at value, and you bought it at, let's say, 500 rupees. And now the price has moved to 1,000 rupees. All the while moving to 1,000 rupees, it was at value. At that point, you realize your average cost is come up to almost 900, 800, right? And then suddenly you see from 1,000, the stock price drops back to 500. Now the question is, should you start buying at 500? Because you're waiting for the knife to drop and you see your average is at 900. Today the market is at 500. Should you buy at 500? You should only buy at 500 if at 500 it's still at value. If the earnings have dropped or the situation has changed dramatically thanks to Donald Trump or AI or whatever it is, you have to see, is it at value? Maybe it is not at value at 500. And if you're putting good money after that, you're buying something expensive. Maybe the right value to buy it is not 500 anymore, it is at 200, taking the current market consideration. So you should look at allocating your capital elsewhere. As long as it's immediately, I'm sure a lot of you are wondering, if that's the case, should I sell it at 900? No. If it's a good company, there's no reason to sell. It is a market cycle. It is just that I don't want it to add more capital. It's not the time to look into that company now. We'll look into something else. So that is the way to pivot. So this is what I mean. Obsessing over cost averages can lead to bad capital allocation. So let me give you a real example. So instead of saying A, B, C, D, let's take NATCO for example, because NATCO is a great example for this, because a lot of you are obsessing about NATCO and your price average. So let's say my average cost of NATCO is 1,000 rupees and I have around 150 shares. And the market is trading NATCO around 860, 865 rupees. And I want to bring my average down to below 1,000, right? That means I'll have to buy at least 25 shares to bring that below 1,000, meaning 999. But then I'm still not satisfied. I say I want to bring my average down to 900. Immediately the number of shares I have to buy goes up to 588 shares I have to buy to look at coming to 900. So let's say at 900 I'm not happy after buying 588 shares. I say I want to bring it all the way down to, I know I cannot come to the exact price because that is a mathematical impossibility. I want to come, if the market is trading at 868, let's say, and I want to come to 870, 2 rupees above I want to come to, right? How much will I have to buy? I have to buy 11,654 shares. That's almost 1 crore. So you see, it just doesn't make sense focusing solely on market price average, because you can never catch it. If you go chasing that, You will miss out all the other opportunities and value propositions in the market. Is NATCO value at 868? Yes. Is NATCO value at 900? Yes. Is NATCO value at 1000? Yes. But this is my opinion. That I feel NATCO is at value at these proposition. But I cannot go chasing, trying to average my costs down to that. NATCO is one example. I can show you an even more extreme example. I have Indian Hotels which I bought at 60 rupees, 70 rupees. Today, Indian Hotels is trading at 800 rupees. Let's say I want to buy some more Indian hotels. It's a reverse problem. Instead of seeing there's an opportunity to buy, I look at it and say, my average cost is 60. If I put more money, my average will go up. So I look like I'm going to have a loss and I refuse to look at a company. Of course, Indian Hotels is expensive right now. You can't look at investing in Indian Hotels. But I wanted to give an example. Even in the case of reverse, it is true. Because if you peg yourself on average cost, you find it very hard to invest into anything. Be it on the downside, like in NATCO's case, where the market is lower than your average price and you want to go down to that. Or the reverse. Let's say you bought a company where you bought it for 60, 70 rupees and today it's trading at 500 rupees. You'll find it hard, even at 500 rupees, it's that value. This is true like for IndusInd Bank. I bought it at 300 rupees. I bought it at 600 rupees. I even bought it when it was 1000 plus rupees. Should I be buying it? Of course. But if I look at my average, I'd always feel like, wait, I should wait till it reaches close to my average, then I should invest. And that is a problem. Because what happens is, you start missing opportunities. You're trying to time the market. You're trying to time your price. You're focusing on things you should not be focusing on. What you should be focusing on, is it at value today? And am I investing the right amount where I don't mind losing it? Those are two critical things you should keep in mind. Be it NATCO, be it IndusInd Bank, be it, Indian Hotels, whichever company you're looking at. Tata Motors. I bought Tata Motors when DVR used to be there at 25, 30 rupees. I bought Tata Motors itself for 70 rupees. I cannot think of buying Tata Motors at 70 rupees. But if I fixate on my cost average, I will never be able to buy Tata Motors ever again. So I strongly urge you, when Monday market opens, these things which you see on your app, they're all hooks that are trying to bait you into behaving in a certain pattern, which they want you to do. The app developers, the companies, the brokers, the market overall regulators, they all want you to keep churning, buying and selling, because that's where the money is to be made. Every time you do a transaction, they get a small clip. They want you to play more in the market. But I want you to control and rein in these emotions which you have and pull it inside and tell yourself there's certain things not worth chasing. There's no point looking at the past and punishing your future. Right? This is logically very true in everything else. You don't get upset about your 12th grade marks now, saying you should have studied harder. You accept it. Could have done better. You made some poor decisions in life, but now you've decided to make better decisions and you're moving forward with that. Same is true when you're investing. Don't fixate on averages. Don't fixate on prices. Fixate on value. Is it on value today? And second most important thing, have you participated today? If you don't participate, like I was talking about that Instagram post, and I posted it everywhere, me and a friend of mine were arguing that the question of fundamental analysis, does it outweigh consistency? I argued saying consistency is far more valuable than fundamental analysis. He was arguing saying, no, without fundamental analysis, there's no point being consistent. I disagreed. And I leave it up to you, and I want to hear your comments down below. I believe fundamentally that if you're consistent, you may not make great returns. Yes, your returns can improve with fundamental analysis, but at least you'll have returns. But if you go on fixating on fundamental analysis and trying to get it right, you will miss opportunities and you'll be waiting for times and you'll be waiting. And sometimes, like my cameraman Arun, will be waiting forever, never entering the market. And before you know it, your horizon shrinks. Constantly, your horizon is shrinking. Every day and every moment is shrinking. As that Pink Floyd song's lyric goes, each day you're getting closer and closer to death. You're not living. We're constantly dying. I know it sounds negative, it is not. It is a realization. All of us think we're living every day. We're not living. We're constantly running and heading towards the end at different velocities, depending on your lifestyle and the choices you make. But rest assured, all of us are running towards the end. So what is it that you're going to do most with that time? If you want to spend most of that time thinking, evaluating, and nitpicking, and beating yourself, hey, that's your choice. But I'm here to say otherwise. I'm saying, okay, you managed to succeed in the past, you managed to fail in the past. That's in the past. What is ahead of you? You see value in the steps you're taking today, take those steps. And maybe we'll get where we need to go. Thanks for watching Be Rich today. I hope you had a wonderful day and you had a wonderful evening. If not, I feel for you. That I hope tomorrow gets a chance for you to rest and recuperate and recharge and mentally get ready on Monday morning as we get into the first full week of May. Thanks for watching Be Rich again. See you tomorrow. Good night.